Hi guys, quick update here for the Nasdaq and for Bitcoin. It's 12th of March 2022. So ultimately, since the start of the year, there's been quite a lot of concerns if you're bullish. I mean, to me, the Nasdaq's topped. Worst case scenario, it's a 10-year bear market. I don't think these highs get challenged, possibly this decade. So I'm sure one day, by the year 2050, Nasdaq will be at 50k. I'm sure it will, because the longer term count is that's either 1 2 1 2 3 4 5 3 4 5, or much like on Bitcoin, this is an ABC truncation. That's a 2, that's a 3. Now we're going to be in a large wave 4. But worst case scenario, 10-year bear market here. Best case scenario, 5-year bear market. Honestly, I don't see this high getting challenged in the next 8 years. Now, big caveat to all of this is next week is the Federal Reserve meeting. So every single interest rate over the last 100 years has eventually led to a resolution of the trend. To me, there's just too much damage, especially in the Nasdaq, which is really the main index that I follow, more so than the S&P, for this to be the count. If that is just a wave 4, fine. We come out of here 20k, then we go into a 10-year bear market. But the way I look at it, this entire move is going to get reversed. So as an absolute minimum, we're going to attack this high here. So to me, the Nasdaq, you can't go near this from a bullish perspective till we end up in this range, and it is quite a large range, but it's definitely going to go sub 10k basically. So that might be an A, B, then maybe a larger crash. Where does the Nasdaq actually bottom? By a bottom, I mean I'm talking about this kind of low, September 02 low, 2009 low. I'm not talking about these interim lows here. Notice, huge move down first of all, then you get an oversold bounce, then it continues its trend. So, really comes, it's quite simple really. Do you want to follow this fractal, or do you want to follow this fractal? Because we are technically copying both of them depending on which one you look at. Either way, we're definitely going to get an oversold bounce coming out of here pretty soon, sometime before June. But that's just going to be an oversold bounce. I don't think Nasdaq takes out this high before the year 30, before the year 2030. So worst case scenario, that's what we end up doing. Now, how low will it eventually end up at? So let's do a 20k to 2k call. We like doing these hero calls. Well, as you can see, 6,119. So, I'll be a buyer off the Nasdaq once it touches the 99 high. So that's the case with the Nasdaq. If we have a look at Nvidia, let's have a look at Tesla. So Tesla's going to go to 200. Let's just get that one out of the way. There's no way Tesla can come back from this. There was a bullish fractal count about 3-4 months ago that it could be part of a blow off top. I'd say Tesla's going to go back to 200. Nvidia, what did I say on Nvidia? Yeah, Nvidia's going to come back to here. So a lot of these stocks have a long way to fall. Obviously, Facebook and PayPal have already fallen. Amazon, you can't really go near this till it gets to 1k. So it's just, how do you want to read what's going on? Is everything just a wave 4? Or has everything already topped and all we're doing is getting short squeezes? Because when you get a short squeeze, technically it weakens the market because people are buying to cover their shorts. They're not buying to initiate a new position. And there's a lot of failed rallies going on here in the Nasdaq. A lot of gap up and gaps down. A lot of erratic volatility. That is classic of bear market behavior. So none of this is a bull market. So, maybe next week we dip one more time. We touch this 12,000 level. Then we get the Federal Reserve expectation is they raise either 0.25 or 0.5. Then we go into summer, oversold bounce, and then we dump again. But for Nasdaq to make its way towards 16,000, I just don't see it happening. Now, if it's not for two stocks, Nasdaq would already be sub 10k. They're trying very hard to keep this propped up, but you're looking at 190 there eventually. Apple, you're looking at 80 probably. So you've got big alerts there going on. So to me, to call this a wave 4, I'm not going to buy that. Basically, I'm just not going to buy that. You're better off being safe. Now, the S&P because 75% of it isn't Nasdaq stocks, basically. It contains energy stocks, healthcare. There is a chance this could still dip one more time, by the way. Fill the ES gap at 4,000. There's a gap here somewhere at 4,000. This one here. So gaps do tend to get filled, especially on a futures contract, because it's effectively a 6-day-a-week market. So it's effectively a near 24-hour, 6-day-a-week or 5-day-a-week market. But if you include the overnight sessions, it's effectively a 24-hour market for most of the week. So this should really get filled. So that's an obvious area for the ES and for the S&P in this sort of, falling type wedge to recover. But the more and more you look at the S&P, you think actually this might have topped too. The alternate count is, once again, we're just making a way for. So to me, it's very simple. Either everything's already topped and we're in a very, very long bear market, or everything has one more, let me take that back, or the S&P has one more new high. We get to its super target at 5,500 over the next 12 months, and then we crash. The only thing supporting this is the spread on the 2 and the 10. So we effectively been short since the start of the year. So you're simultaneously short the 2 and you're long the 10. So you're short the 10 and 2-year spread. This is definitely going to invert. Right now we're making a wave 3 consolidation. Then we're going to go lower. From the point of inversion, historically anyway, the S&P can still run up another 13 months on average and can still rise another circa 22% to its peak. The same thing occurred back in 1999. So that's the only reason I'm a little bit unsure on the S&P. But regardless of inversion of the yield curve, what has happened before doesn't necessarily have to happen again. But that's the only really doubt that I have, is whether the S&P has topped or not. But for the Nasdaq to recover, I just don't see it happening. And to me, it's more than just following the index, because obviously that's not how this game works. You don't only follow the index. The Nasdaq is a fruit basket, so to speak. So it's contained out of many, many stocks. None of these stocks are making new highs. When you look at Facebook, when the value, we made a great call on Facebook. I forget how long here. That was the biggest drop in human history until this happened, right? So when the value of Disney comes out of a major stock like Facebook, kind of gets you worried. If you're bottom fishing around here at 187, it doesn't look very good, does it? So it's just a matter of time before Amazon, Google, and Microsoft follow Facebook's demise, really. So, I'm sure longer term, this might eventually go to 796 at some point, perhaps over the next 10, 20 years. But, there's not a lot of support around here, is there? So, you're looking at least here. And if it gets to 82, great. Buy at 82, wait 10 years, and you'll eventually get your target. But this is causing a lot of damage to the Nasdaq. And Tesla, for Tesla to now run up again, it's very, very unlikely. The log chart is great in bull markets, but in bear markets, log chart doesn't really help you. So let's just finish off with Bitcoin. So, worst case scenario, you're never going to see this high ever again. That's just the worst case scenario. I made a great call 3-4 years ago now that this was the top. If that's not the top, this might be the top, in the sense that that's an ABC. So I'm not running that as a 1-2. That's an ABC truncation here for a wave 4. So the larger count would be, I thought that was the wave 5. Quite surprised by everything that's happened here. But artificial liquidity getting pumped in and XYZ going on, fine. It kind of makes sense for Bitcoin to have one more new high. So if that was the 3, that's the 4, that's the 5. So worst case scenario, you're never going to see 70k ever again, and we're in a 10-year bear market on Bitcoin, which will eventually probably end up floating all the way down to at least 20k, if not a little bit lower. So to me, eventually it's gonna reach 20k. Maybe we get to, 15k or something. Then it just bounces around. So maybe, something like this. Well, it does this, takes out these lows, everyone gets too short for their own good. Then we do something like this, then a larger correction, then a sort of long drawn out correction here. But that could take 5 years. We are well overdue a 2018 year type bear market on Bitcoin. And if you're going to dump something, you would dump altcoins first, followed by Bitcoin, followed by Nasdaq, followed by HYG, followed by EEM, and then the last thing they're going to dump is the US bond market. So we've been very bullish on this for the last 2 years. That's definitely going to go higher. Mortgage rates are definitely going to go higher, and really the big collapse, so to speak, is when this line breaks. So this line's definitely going to get hit. This, and then that's it. It's all over. So it's very hard to be bullish on Bitcoin with everything going on. We won't look at the dollar chart here, but let's just say the dollar's not going to go any lower. It's very hard to find any case where the DXY drops below 96, 97. It's only going to go higher, and it's going to go much, much higher. So short term, what's going on with Bitcoin? So that's the long term count. Multi-year bear market here. Short term, I'm reading this as a leading diagonal wave 1 or a wave A. So 1, 2, and yeah, I suppose if I'm going to give the worst case scenario, yeah, fine. The best case scenario is the count that we've had from ages ago, which is just, okay, everyone's got this count. It's an ABC, which pairs up with this 1, 2, and that's fine, 3, 4, 5. And once again, the only way this can happen is if you are of the opinion that the Nasdaq or the S&P is going to make one more new high. Then I can entertain this count. So this is very much dependent on what happens next week and how the 3-month quarterly candle closes. But I'm seeing so much damage going on here, and this, I just can't for the life of me believe this gets taken out before the year 2030. I just can't believe that. I just find that so hard to believe. So I would rather be bearish / neutral here, looking for oversold bounces rather than looking for, okay, resolution of the bull market. And that's really what it is all about. Are we in a bull market or a bear market here? Anyway, so yeah, best case scenario, it's an ABC, you'll get to 96k, then you'll, dump. To me, that's not going to happen. I said down here, 20% chance of making a new high, fine. We got a new high, but we failed up there. And you never want to see that. When you see a high getting taken out and then failing almost immediately, that's not very positive at all. Usually, the price, obviously, ends up making its way back to the other side of range. Well, the other side of range is where everyone's waiting with their limit orders, which is here. So this is one of those cases where everyone's right. Everyone's looking for a swipe of these lows. The Elliott wave confirms that, wave theory confirms that, the volume confirms that, and even the S&P potentially going to 4,000, which obviously would be one more new low. This is what everyone's waiting for. One more new low before the end of the month. Then, if you're bullish, that might happen. I would say there's a 0% probability of that happening. To me, that's a long-term top there. That's a long-term top, because I'm so bearish on what I'm seeing everywhere else. To me, it's an oversold bounce out of it, either a wave 2 or a wave B. Then we end up falling back down again, probably to the 1 average that everyone's looking at. So we need more than a plan B here. Someone needs to come up with a plan C. So where's the 200-week moving average? Well, it's all the way over here at 20,000, which lines up with the previous high. So let's take a lot of that off. So let's entertain this leading diagonal wave 1, which is basically an expanding triangle megaphone pattern, right? So something like this, something like this, yeah? Basically, well, if you work out all of your targets, it can't really go lower than 28.5k because wave 3 can't be the shortest. So once this resolves itself it would be down. That would then constitute a wave 1 or a wave A. Then I'm looking at this, an oversold bounce, potentially back up to, I don't know, 45k, maybe even 50k. I'm reading that as a wave 2 or a wave B. Then we're going to go down. I am not working this to happen unless the Federal Reserve do something spectacular, maybe another round of stimulus checks or something. I don't see how they can fix this now. A panic you can fix, but a crash you can't, because a crash is more systematic, and that's the thing. Since the start of the year and the end of last year, certainly since the start of this year, it's been very systematic. A crash is systematic. A panic is just that. A panic usually gets reversed. Anyway, so that's the count. There's nothing to do here until Bitcoin makes a new low. And obviously we can have a look through some charts here. Which one we're going to have a look at? Ethereum is the same, really. So similar kind of count. The chance you may never see this high ever again. So that's the worst case scenario. You'll be probably waiting 10 years for that. Eventually, Ethereum, much like Bitcoin. If Bitcoin can get to 20k, Ethereum can definitely get down to here. Once again, similar to Bitcoin, this is just a consolidation. Probably a leading diagonal 1, 2, 3, 4, 5. Once again, pretty similar to Bitcoin. We're looking at what happens at 28, 29, 30k. If it comes out of here and it fails down here, traps everyone short, looking for an oversold bounce, and then eventually we end up, going back down again. And once again, you could say that the 5 is in. So, the long-term count isn't that, that's not the count. There's just very low probability that this is what's going on. The real count is the count which I've had, is that this was all an ABC truncation on Ethereum and on Bitcoin. That was all your wave 4, which means the count was that this actually truncated up here. This is the count. That this 5 actually truncated out here. So if this 5 has truncated, we're in a very, very, multi-year bear market here. Something like this. So it's going to go to at least the 38.2, surely. It doesn't really, if that's a major wave 2 going on, surely we can't stop at 2,000. The long-term count is that we're going to go to at least 1,000, maybe even 700-800. So, it doesn't look good here long-term for this market. And, how long did that take? 18. Fine, it took 3 years. So maybe you will see that higher again. Maybe, it's not a 10-year bear market here. Maybe it's just a 3-4 year bear market. So I don't know, you can just copy and paste some of that onto here then. Depending on how you want to play this. So if you just copy the exact fractal over, just add it onto here, and then that basically that gets you, that gets you something like that. I can't imagine it falling too far down here, but the Fibonacci's, they don't really lie, do they? So to me, as an absolute minimum, the wave 2 should go to the 38.2. So eventually, Ethereum probably gets to 1,000 here. So that's the long-term count. Anyway, I'm going to wrap it up there. If you want to have a look at the group or the courses, you can have a look. Dealing with a long-term bear market, you're going to need to know how to operate in futures and options. So it's a good idea to have a look. I think the courses speak for themselves. So, I'll try and get another video out at some point soon. Anyway, I'll wrap it up there. Be careful what you do.